Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We've got rate cuts in the European Central Bank. Very exciting. So now we're going to see how the markets react to this. We're going to get a full interview from the ECB. That comes up in a second. We've got the press conference. Have to cover these events. They are huge events. Cannot afford to miss them. It's a great day for the US market as well. We're all paying close attention to this one. So welcome everybody this morning. If you are new, we've got the big event tomorrow, of course. We're excited about that, right? Everyone knows what's coming tomorrow night when we get to move XRP and ZEBIC. The event that everyone is talking about. It's viral on X. It's viral on my TikTok channel. It's viral on YouTube, or it's going to go viral tomorrow night. Very exciting. This is the event. If you've not heard about it, this is the event. With or without you, you cannot afford to miss this. All right, there it is. There's the link. It's pinned to the top, but in a few moments' time, we're going over to the ECB, the European Central Bank, to see what happens today with the rates. Now, we know the rates have come down. Now we're looking forward to the next one. Are they going to give any hint about rates going forward? Will they mention the Fed, Jerome Powell, all the rest of it? Well, we're about to find out. We've got just a couple of moments to go. Let me give you the numbers, what we've just got. So the first thing I want to do is ask everyone, if you've not yet subscribed to the channel. We had a historic day yesterday. I will show you what happened yesterday. It was pretty cool. This is what happened yesterday, live on the show. Hopefully you didn't miss it. Let's have a look. Let me show you. This happened yesterday. We passed 85,000 subscribers. It was a huge day on the show yesterday. And then the moment we went through it, 158 more. We're heading straight to 86. The big one is 90, and then the countdown to 100,000 subscribers and get that official plaque on the wall. You know, at less than 0.8 of all YouTube channels in the world, that's 0.8 of all channels in the world are over 100,000. It's an incredible thing. And I found out yesterday, 0.06 of X accounts are over 1,000, and way less than that, over 5,000. Yesterday we passed 5,000 on X. Can't believe it. It's been just such an incredible journey. Anyway, get excited because rate cuts is great. Always great to hear that we're getting rate cuts. So what we want to do is we want to get everybody into the show. How do we do that? We need to let everybody know we're here. So we have got exactly 6 minutes before the presentation begins. We're going to cover it live. So we want 1 minute to get to, what shall we go for? There's 139 watching. Is this not a big story? It should be. People don't pay attention to the stories they should, and they pay attention to the ones that aren't important. It always happens on the stock market, but that's the way it is. So if you came across from X, I was on X a few moments ago, let me know in the chat if you came across from X. Right, you know what we're going to do? We're going to get the likes up. We want 100 likes in 1 minute. So let's bring it on. You ready? In 3, 2, 1, let's go. I can hardly hear that. I'm hoping that you can. That's very quiet in my system this morning for some reason, but I'm going to assume it's working. All right. Tell me if it's working. I can't even hear my own flipping sound this morning, but never mind. How many people have we got watching? Here we go. 152. Let's get it going. Let's have a look. 152. There it is. 152 and 100 likes. It's a great day. It was expected though, but we are expecting another face-ripping rally. So how many likes are we starting off with? We're starting off with 2. Let's get ready to rock and roll. You ready? 2 likes in 3, 2, 1. We're already up to, we want 100 in 1 minute. 43. Okay, we're starting to move now. The rates are down in Europe. We're going to be bringing that to you in a few seconds. I did take a bit of a leap of faith. I said rate cuts in my title before it was announced. I was right. again. But, you know, I could have been wrong, but I was very confident of this one. So it was in the actual title. Rate cuts, yes. ECB cuts rates live. Okay, here we go. So 43 likes. Let's refresh it. We want to get 100 likes in 1 minute if we can, because we're about to bring the call to you. We're now up to 56. It's on the way. Not many people paying a close attention to this today. They should be. This is a major event. Absolutely should be watching this. But people will pay a close attention to things that they shouldn't even be bothering with. Things that are important, they don't watch. It's the way it always goes. It's like earnings reports. Who cares about earnings reports? I do. I like when the markets go red. I'm looking for opportunity. People only want to see it when it goes up, which is pointless. If it goes up, you're already in. I mean, you don't do anything, right? Anyway, okay, 56 like. We need 100 on this. How many are we up to now? Are we nearly there? We are now at 67 likes. Okay, we're on the way. We're on the way. If you just tuned in, we're seconds away from the rate the rate presentation from the ECB. Very, very important event, this one. Tap the like button and consider subscribing if you'd like to. We just hit a milestone yesterday of 85,000 and we're flying now up to 90 and then counting down to 100,000 subscribers. All right, let's see. Are we there yet? We've got to be close. We've got to be close. Let's refresh the screen. How long have we got? We got 4 minutes to go. Oh my gosh, I hope we get there in time. We got 67 likes. We are now up to, let's have a look, 75. Oh, we're 3/4 of the way. 75%. We just need 25 more likes, and then we'll be there. We got the Fed watching, paying close attention to this, of course. And now Donald Trump came out and said that the ECB have cut rates 9 times. That's not true. They haven't. He also said the Fed should follow. No, they don't. Europe follows the Fed. It's a completely different economy. I'm amazed when Trump keeps coming out with that. You know, he's a businessman. He understands markets, but kind of doesn't when he says stuff like that. It's a bit silly. Donald Trump saying the Fed should follow the EU. The EU follows the Fed. It's completely different. Completely different set of numbers. And to say they've cut rates 9 times is, I don't know why politicians lie, because you just lose credibility. Always tell the truth. Anyway, I don't know why people do it. If you lie once, no one believes a word you say, and it's just, you got no power. I don't know why anyone lies. I always tell you the truth on this show. Right, 75. We've got seconds to go. I've got to cover the news. Got to cover the live event. 84 now. Oh, come on. We've got to get there. 191 watching. We need 100 likes to start the show. The ECB, we're going live to the presentation in just a few minutes' time. We want to cover it. I really, really hope that you're going to get there. 100, because if we get to 100, YouTube will share this out. This is the sort of news that everyone should be paying close attention to, and no one is. No one ever bothers with the important stuff. They only ever watch the pumps. It's crazy. If XRP was pumping today, we'd have, 30,000 people watching. Well, it should be 30,000 people watching when it goes down to find the entry level to buy it. If you're an investor, it's always back to front, and these reports should be massive, but they're not. Anyway, what we got? Once we get 100, I'll start. I mean, it's not up to me, really. I've got to start when Lagarde takes the stage. Anyway, 84. Let's refresh it. I need 100 to get suggested on YouTube. Let's get ready to rock and roll. I'm going to give you some links in a second. 94. Now we're close. We need 6 more likes. While we're waiting, there is my X account. You might want to follow me on X for the big event tomorrow night. If you've not yet seen it, this is the big event tomorrow night. Zebic to $1. Let it be, with or without you. We're doing it tomorrow night. It's going to be a huge event. I've got all the biggest whales watching. I've got guests calling in. I've got everything happening. If you miss tomorrow night's event, then you are sleeping at the wheel. That's nothing I can do about that. You snooze, you lose. That's the big event. Right, how long have we got now? Oh, we got 1.5 minutes before 1.5 minutes to go before the I need to turn these on. I need to turn my alerts on before Lagarde takes the stage. There's the event for tomorrow night. Make sure that you've left a like and shared it. Have we got 100 likes? I think we have. Let me show you how many people have already liked tomorrow night's event. 156. Everyone go and like this. This is the let it be Zebic to $1. And that happens tomorrow night. You don't want to miss it. 156. Go in the chat. People are leaving comments. Get ready for this. Okay, I think we've done it. Let me go over to this now. I think we have done it. We got 100. Refresh the screen. Looks like we have. And we are now getting suggested on YouTube. Yes, 117 people. Marvelous. Now we can get on with what's important. All right, so let's bring it on. Let's bring it on. Thank you ever so much, everybody who tapped the like button and subscribed to the channel. Thank you so much. All right, let's get ready. Okay. Now, will they be on time? We shall certainly hope so. We are waiting any second now. The broadcast is scheduled for 5, 4, 3, 2, 1. It's scheduled for now. Scheduled for now. Now we're waiting. Any moment now. Christine Lagarde will be taking the stage, giving us her thoughts on the economy. Of course, Trump is wrong on this. The EU watches the Fed. The Fed does not watch the EU, but we do pay close attention to this event. We have got more people watching this event than Bloomberg does. And believe that or not, we do. Incredible, right? This is a major story, and people just don't tune in for it. We've got more than Bloomberg right now. Yep. Unbelievable. They got 48 people waiting. We've got 247. Incredible. Isn't it? There you go. The biggest stories don't get watched, and we get more than Bloomberg anyway. They should be tuning into us. All right, we can present it. Okay. We're just waiting now for it to go live. Any second now. We're just on standby. All we can do is wait. It's scheduled for 2 minutes ago. So we're on standby. We need to hear this. This is very, very important. There's 50 people waiting on Bloomberg. And there is... shall I go in the chat? I tell you what. Should we go in the chat? This would be funny. Should we go in the chat and tell everybody we're covering it? Shall I give you the link? Who wants to spam it for me? Anybody? I shouldn't do it. Look, this is the Bloomberg feed, right? There's 51 people waiting. Who wants to go in and spam the chat and say Martyn Lucas is doing it better? Shall I give you the link? Let's see if anyone does it. I can't do it. I can't do stuff like that. I've got a relationship with Bloomberg. But there you go. There's the link. There's the link. Go into Bloomberg. Go into Bloomberg, right? They've got 51 waiting, and they got 2.7 million subscribers and 51 waiting. We've got 265. We got more than Bloomberg. I love it. Absolutely brilliant. Let's see someone does it. I will say good luck. I will say good luck all. Good luck all. Good luck. I will be nice. Good luck all. A major event today. We are paying close attention to people are doing it. People are doing it. People are doing it. I love it. Look at that. There you go. Good luck all. A major event today. Martyn Lucas, as more people watching Bloomberg sucks. Okay, that's hilarious.
The inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. Inflation is currently at around our 2% medium-term target. In the baseline of the new Eurosystem staff projections, headline inflation is set to average 2% in 2025, 1.6% in 2026, and 2% in 2027.
Vaz has become a member.
The downward
Martyn
revisions
Lucas
compared
smaller
with the
YouTube
March
channel
projections by 0.3 percentage point for both 25
Sonny
and
Bloomberg.
26 mainly reflect lower assumptions for energy prices and a stronger euro. Staff expects inflation, excluding energy and food, to average 2.4% in 25 and 1.9% in both 26 and 27, broadly unchanged since March. Staff see real GDP growth averaging 0.9%
There's the face ripping rally. I promised you. There it
in
is.
26,
There it
and
is.
1.3% in
I
27.
promised you that was going to happen,
The
and there it is.
unrevised growth projection for 2025
Woohoo.
reflects a stronger than
Tune.
expected first quarter, combined with weaker
He's
prospects
right again. Just
for the
saying.
remainder of the year. While the uncertainty surrounding trade policies is expected to weigh on business investment and growth projection for especially in the short term, rising government investment in defense and infrastructure will increasingly support growth over the medium term.
Bloomberg disabled the
Higher
live
real
chat
incomes and a robust
because of everybody
labour
going
market
in.
will allow households to
Bloomberg,
spend
we whipped
more.
you.
Together with more favourable financing conditions, this should make the economy more resilient to global shocks. In the context of high uncertainty, staff also assessed some of the mechanisms by which different trade policies could affect growth and inflation under some alternative illustrative scenarios. These scenarios will be published with the staff projections on our website. Under this scenario analysis, a further escalation of trade tensions over the coming months.
It's disabled, guys, on their actual live. It is. If you go to their live, you'll see it's disabled. You're watching a different broadcast.
If trade tensions were resolved with a benign outcome, growth and to a lesser extent inflation would be higher in the baseline projections. Most measures of underlying inflation suggest that inflation will settle at around our 2% medium-term target on a sustained basis. Wage growth is still elevated, but continues to moderate visibly, and profits are partially buffering its impact on inflation.
Matthew Howinkle has
The
become a
concerns
member.
that increased uncertainty and a volatile market response to the trade tension in April would have a tightening impact on financing conditions have eased.
Face-ripping rally promised.
We are determined to ensure
rally
that
delivered.
inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of exceptional uncertainty, we will
Mike,
follow
it's
a
their other channel, the main
data-dependent
channel.
and
There's two.
meeting-by-meeting
If you go and see,
approach
there's
to
two.
determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release that
I'm
is
not
available
exaggerating,
on our website.
Ellie.
So
I'm now up
outline
$66,000
in more
since that
details
dip.
how we see the economy and inflation
If that's
developing.
not a face rip,
And we'll
I don't
then
know what is.
explain our assessment of financial and monetary
$66,000
conditions.
from there
The
to there.
economy grew by 0.3% in the first quarter of 2025,
And it's just
according to
beginning.
Eurostat's flash estimate. Unemployment at 6.2% in April is at its lowest level since the launch of the euro, and employment grew by 0.3% in the first quarter of the year, according to the flash estimate. In line with the staff projections, survey data point overall to some weaker prospects in the near term. While manufacturing has strengthened, partly because trade has been brought forward in anticipation of higher tariff, the more domestically oriented services sector is slowing. Higher tariffs and a stronger euro are expected to make it harder for firms to export. High uncertainty is expected to weigh on investment, but at the same time, several factors are keeping the economy resilient and should support growth over the medium term. A strong labour market, rising real incomes, robust private sector balance sheets, and easier financing conditions, in part because of our past interest rate cuts, should all help consumers and firms withstand the fallout from a volatile global environment. Recently announced measures to step up defence and infrastructure investment should also bolster growth. In the present geopolitical environment, it is even more urgent for fiscal and structural policies to make the euro area economy more productive, more competitive, and more resilient. The European Commission's Competitiveness Compass provides a concrete roadmap for action, and its proposals, including on simplification, should be swiftly adopted. This includes completing the Savings and Investment Union, following a clear and ambitious timetable. It is also important to rapidly establish the legislative framework to prepare the ground for the potential introduction of a digital euro. Governments should ensure sustainable public finances in line with the EU's economic governance framework, while prioritizing essential growth-enhancing structural reforms and strategic investment. Looking at inflation, annual inflation declined to 1.9% in May, from 2.2% in April, according to Eurostat's flash estimates. Energy price inflation remained at minus 3.6%. Food price inflation rose to 3.3%, from 3% the month before. Goods inflation was unchanged at 0.6%, while services inflation dropped to 3.2% from 4% in April. Services inflation had jumped in April mainly because prices for travel services around the Easter holidays went up by more than expected. Most indicators of underlying inflation suggest that inflation will stabilize sustainably at our 2% medium-term target. Labour costs are gradually moderating, as indicated by incoming data on negotiated wages and available country data on compensation per employee. The ECB's wage tracker points to a further easing of negotiated wage growth in 2025, while the staff projections see wage growth falling to below 3% in 2026 and 2027.
I was live on X, guys. You wasn't missing anything.
While lower energy prices and a stronger euro are putting downward pressure on inflation in the near term, inflation is expected to return to target in 2027. Short-term consumer inflation expectations edged up in April, likely reflecting news about trade tensions. But most measures of longer-term inflation expectations continue to stand at around 2%, which supports the stabilization of inflation around our target. Turning now to our risk assessment. Risks to economic growth remain tilted to the downside. A further escalation in global trade tensions and associated uncertainties could lower euro area growth by dampening exports and dragging down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions and greater risk aversion, and make firms and households less willing to invest and consume. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty. By contrast, if trade and geopolitical tensions were resolved swiftly, this could lift sentiment and spur activity. A further increase in defense and infrastructure spending, together with productivity-enhancing reforms, would also add to growth. The outlook for euro area inflation is more uncertain than usual. As a result of the volatile global trade policy environment, falling energy prices and a stronger euro could put further downward pressure on inflation. This could be reinforced if higher tariffs led to lower demand for euro area exports and to countries with overcapacity rerouting their exports to the euro area. Trade tensions could lead to greater volatility and risk aversion in financial markets, which would weigh on domestic demand and would thereby also lower inflation. By contrast, a fragmentation of global supply chains could raise inflation by pushing up import prices and adding to capacity constraints in the domestic economy. A boost in defense and infrastructure spending could also raise inflation over the medium term. Extreme weather events and the unfolding climate crisis more broadly could drive up food prices by more than expected. Let's look at the financial and monetary conditions. Risk-free interest rates have remained broadly unchanged since our last meeting. Equity prices have risen, and corporate bond spreads have narrowed in response to more positive news about global trade policies and the improvement in global risk sentiment. Our past interest rate cuts continue to make corporate borrowing less expensive. The average interest rate on new loans to firms declined to 3.8% from 3.9% in March. The cost of issuing market-based debt was unchanged at 3.7%. Bank lending to firms continued to strengthen gradually, growing by an annual rate of 2.6% in April after 2.4% in March, while corporate bond issuance was subdued. The average interest rate on new mortgages stayed at 3.3% in April, while growth in mortgage lending increased to 1.9%. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. While euro area banks remain resilient, broader financial stability risks remain elevated, in particular owing to highly uncertain and volatile global trade policies. Macroprudential policy remains the first line of defense against the buildup of financial vulnerabilities, enhancing resilience and preserving macroprudential space. So in conclusion, the Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of exceptional uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions.
Great stuff.
And the first
Solid.
question goes to Mark Schröers of Bloomberg. Mark, please.
Yes, thanks a lot for taking the questions. The first one is on rates. Has anyone today advocated either pausing rate cuts or cutting by a bigger 50 basis points? And would you say that after today's rate cut to 2%, a pause at the next meeting in July would make sense, also to wait for new projections in September? And the other one is not on the future of rates, but on your own future. WEF founder Klaus Schwab had said that you discussed leaving the ECB before the end of your term to lead the World Economic Forum. I know the ECB stated your determination to stay, but without an outright denial of these talks. So have these talks taken place or not? And have you contemplated leaving the ECB early? Thank you.
Thank you for your two questions, and I'll start with the first one, which is really the order of business and the main topic today. So we cut interest rates by 25 basis points. And with today's cut at the current level of interest rates, we believe that we are in a good position to navigate the uncertain conditions that will be coming up. So we are well positioned to navigate those circumstances. I can also tell you that it was an almost unanimous decision. There was one governing council member who did not support the decision, but other than that, it was virtually unanimous. So I would call it either very broad consensus or virtually unanimous support for the decision to cut by 25 basis points. And obviously, we analyzed the situation in the light of the three criteria that you know well, because they are repeated several times in the monetary policy statement and have not varied for a number of meetings now. But under those three criteria, really the situation points towards inflation settling at our 2% targets. We can come back to the path, but this is what we are seeing, and that is what has predicated the cut that we made today. Now, you asked me about my future, which is far less important than the future of the economy and the future of our monetary policy, rest assured. But I can very firmly tell you that I have always been, and I'm fully
Please tap the like button and consider subscribing to our channel. Thank you very much indeed. We are on the way now to 100,000 subscribers.
So I regret to tell you that you're not about to see the back of me.
She's not leaving. That's
Next
good
question
news.
goes to Annette Weisbach of CNBC.
That's good
Annette,
news.
please.
Hi, President Lagarde. I have a question. When I read through the communiqué today, I have the feeling that you're quite confident on the economy despite all the uncertainties. So is that a right assessment? And at the same time, you're also quite confident that inflation is under control. So does that bring me to the right conclusion that we're almost done when it comes to rate cutting? And then a question on your thinking about the boost from the fiscal space, because clearly it will take time until we'll see that materializing on the economy and also probably on inflation. So just to also understand, why are you so confident that this is actually supporting the economy also in the shorter term, despite all the uncertainties? Thank you.
Well, thank you so much for your question. We have hardly revised our growth numbers. So the only year where we have slightly revised is 2026, and by 0.1%. So we have confirmed our projected growth rate as per our projection of last March at 0.9% for 2025. And that was certainly reinforced by the number we had for Q1. So I mentioned the 0.3 Q1 number, which was, as you know, revised from an initial 0.4. I would not exclude that there be further revision of that number on the upside. Now, this is attributable to multiple factors. It's improved consumption, it's improved investment, but more importantly, it's the buildup of inventory or anticipated purchases and therefore sales in fear and anticipation of the tariffs. So that Q1 is, of course, very peculiar, well, very particular, more than peculiar, and is clearly giving momentum to the growth that we are seeing and anticipating for 2025. But again, I would not exclude that that number of 0.3 be revised upward, given the volume that we are seeing being traded out of some countries in particular. But we are not revising 27, and we are very marginally revising 2026 because there is a carryover, number one, and because we believe that the impact of tariff, if and when they materialize, on the export that we have towards the United States, which I remind you is only 17% of our total exports outside from the euro area and European countries, will impact predominantly on 26 and will then be significantly offset by the expected investment in both military equipment and construction, or infrastructure, if you will, particularly out of some countries. So our assessment is that that will have a bearing on 27 predominantly, some in 26, but predominantly in 27. So you have this offset between the two. So are we confident? I think that would be far-fetched, because we are in a good place. As I said, I think we are well positioned as you know, after that 25 basis point rate cut and with the rate path as it is. We are in a good place. We will face uncertainty. We do not know what the outcome of the negotiations will be between the various partners. We don't know the level of retaliation that might be decided, which incidentally is not included in our baseline, as you will see published later on. And as a result, we have to be prepared, and we will be assessing meeting by meeting data as they come in. But, you know, as I said again, we are well positioned at the moment. And the path of inflation that we see certainly returns to 2% in 2027. So we start from a place where we have inflation for 2025 at 2%. It goes below target in 26 for reasons that have predominantly to do with the price of energy and the value of the euro. Because as you know, it's based on our current assumption of those prices now. And that's what explains these numbers.
Next question, Francesco Canepa of Reuters. Francesco, please.
Thank you very much. Good afternoon.
Good afternoon.
So you said that the current level of rates leaves you in a good position.
Mm-hmm.
Are we to understand that as an indication that you're done cutting interest rates? Or if I can rephrase the question in another way, what would you need to see for you to cut rates again?
Again, we are in a good position. And we are in a good position on the basis of the current rate path and with the 25 basis point cuts that we decided, so that we can face the uncertainties that are coming our way. But as you have heard in the monetary policy statement, we will decide meeting by meeting on the basis of data. And we will assess, as and when data come in, whether or not that position is secure in order to deliver on our 2% medium-term target. What I'm saying today is that we are in that good position.
Next question to Aude Kersulek of BFM Business. Aude, please.
Thank you, President Lagarde, for taking my question. First question, would you say the monetary stance has now shifted to neutral, or is it still restrictive, even slightly? And the second question, some countries are facing higher debt and may struggle to attract investors. At what point does that become a concern for the ECB in terms of policy transmission and financial stability? Thank you.
Well, thank you for your two questions. We have not discussed this wonderful concept of the neutral rate on the occasion of this meeting. And I think that we all know well that as we are getting closer to that zone, we need to be particularly attentive. We need to be confident in our resolve to deliver with the appropriate monetary policy our medium-term 2% target. But we have not discussed that neutral rate. And I alluded to that at our last press conference. You know, the neutral rate is predicated on the absence of shock. Great equilibrium, no shock. Well, I wish there was no shock. But we have just nearly concluded a cycle of monetary policy that dealt with a series of shocks. Pandemic, war in Ukraine, energy crisis. And I think we have done that decently well. Inflation is at target 2% medium term. We are currently around 2%. Expectations are well anchored around 2%. And those elements that I told you repeatedly over the few last conferences was of concern to us, namely inflation on services, evolution of wages, evolution of profit. Those three elements are coming really in line with what our projections were in order to deliver on our 2%
Please tap the like button
target.
and consider subscribing. Thank you very much indeed.
For the moment,
I'll give
we
you
are
the other links
facing
that you might need
significant
in the chat now.
uncertainty. You will read in the material, in the monetary policy statement, I think we quote uncertainty 9 or 10 times. It abounds. There is plenty of that. And clearly we are trying to improve our game as much as we can in order to anticipate, measure, caliber, but it's proving obviously quite difficult. And that's the reason you will be not only receiving our projection exercise, but also the scenarios which encapsulate some of the channels of transmission to growth and inflation. Some of them, not all of them. In particular, I would mention one that we discussed quite extensively during the Governing Council, which is the disruption of the supply chain. That is not included in any of our scenarios.
And the next question goes to Svein Ilyan of the Bulgarian newswire BTA.
Oh, welcome.
Thank you.
I hope all your colleagues have welcomed you to the circle.
I hope to. According to the ECB convergence report published Wednesday, Bulgaria is ready to join the Eurozone on January 1st next year. What do you expect to be the effects of Bulgaria's accession to the euro area, and will the currency zone be stronger with the likely new member state?
So first of all, I would like to congratulate Bulgaria, the Bulgarian people, and welcome them. This is not yet a completed decision-making process because, as you know, while the Commission and us have validated under the convergence report that the criteria are met, the European Council still has to approve. So I don't want to prejudge what the European Council will decide, but there is a very strong likelihood that Bulgaria will become our 21st member around the table. And we are delighted that the circle gets larger, and we will be looking forward to the Bulgarian contributions, both in terms of intellectual input, economic analysis, monetary policy determination, and as soon as the decision is final with the European Council, as you probably know, we will welcome for several meetings before January 1st the Bulgarian representative at the table of the Governing Council in order to sort of facilitate and do the onboarding properly, and so that we can also get to know a new colleague.
It's not going to change if I
also hope that the Bulgarian people will value the solidity of the euro area, the solidity of the currency that we have. Some of you have probably noticed that the supportive
it's a radio frequency near her microphone
of the Europeans has gone up and is now at 83%. So
I will try and refresh it. I don't think it'll make any difference at all. That sounds like a radio frequency on a microphone.
3% of the Europeans, based on the survey that is on a regular basis, 83% actually value and appreciate the euro as their currency. So I hope we can together do everything we can.
This is a radio frequency being picked up on a microphone.
The value and the shield impact that the euro constitutes for new members.
And the next question goes to Stefan Recchius.
They won't be aware of this.
Thank you very much for the floor. First question is, some analysts have entertained the idea that you could skip July to make a concession to those Governing Council members who have
there are no closed captions available.
Further. Could you walk us through today's deliberations in this light? And my second question is, you have been reluctant to declare victory over inflation for quite some time.
Sorry about the audio.
So
it's coming from Bloomberg, not me.
For a victory lap, and if not, is this the right time for
victory laps are always nice, but there is always another battle.
Let me try something a second. Unfortunately, it is what it is.
And I think we are...
Yeah, I mean...
Trading day.
Yeah, you can see it's their broadcast, unfortunately, has a problem.
Including COVID, including the war in Ukraine, the illegitimate war in Ukraine, and the energy crisis. But, of course, we are now into a different...
You can turn on subtitles, that will help.
Different time.
From my end, they don't have it their end, but my end does.
With different policies. And we will continue to analyze and assess and measure and make sure that we deliver on our 2% medium-term target. This is in a way the thing that is certain. You should not doubt for a second our determination to deliver with the appropriate monetary policy, the 2% medium-term target.
We are aware of the sound. It's coming from Bloomberg.
With this,
please stand by.
2% projected inflation for 2025, around 2% for 2027, and 1.6 in 26, caused predominantly with our current assumptions on the price of energy and the value of the euro. We have a good path to this target, and we'll make sure that
there is no other live feed. I'm trying to find it.
I don't mean to use the word oscillate or navigate, but it will be, close navigation around our target. That's where we have to be and want to be.
Next question to Olaf Storbeck.
CNBC has a feed. Let me try CNBC's feed.
Thanks. My first question is on this concept of the direction of travel, which you earlier used in this report.
It's coming directly from them, I'm afraid.
Today's remarks suggest...
I'm trying to find an alternative feed, but there isn't one.
And the value of
there we
the
go.
euro,
CNBC have fixed it.
We have a good path to this target, and we'll make sure that we I don't mean to use the word oscillate or navigate, but it will be, close navigation around our target. That's where we have to be and want to be.
Next question to Olaf Storbeck of the Financial Times. Olaf, please.
Thanks. My first question is on this concept of the direction of travel, which you earlier used in this rate cycle. Your today's remarks suggest to me that the direction of travel now probably is more a sideways movement rather than kind of a downward as it was by the end of the year. Would that be the right takeaway from your today's remarks? And my second question again is on these remarks by Klaus Schwab of the World Economic Forum. Some people suggest that the disclosure that you considered leaving the ECB early could undermine your ability to do your job properly. As you
welcome, Abel. If you've come from X, let me know that you came from X, and I'll welcome you in. Thank you.
Concerns. Thanks.
Thank you for your two questions. On the first one, the reason I used the direction of travel concept was when we were really at a distance from our medium-term 2% target. So to talk about the direction of travel, when we have our medium-term 2% target in sight, sustainably so, when underlying inflation is not budging. So for those in doubt, headline inflation in 2026 is clearly oil and gas and the value of the euro, which we assess at the time when we cut off the period when we do when staff does its assessment. And underlying inflation, core inflation, this is hardly moving, and it's at around our target. So there's no point talking about the direction of travel. There's no point talking about sideways. What I'm saying is that we will be determined to deliver that 2% medium-term target. We will be looking at all data that come in. We will be deciding meeting by meeting, and we will constantly assess and reassess how we are delivering on this 2% medium-term target. Now, as to your second question, I will repeat what I have said. I have always been driven by my mandate, and I'm determined to complete my term. Period.
And the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. I have two questions. One is on APP and PEP, in the sense that the ECB no longer reinvests the principal payments of these portfolios. Would the Governing Council have to put on hold quantitative tightening if it were to decide for a pause in interest rate cuts? Even if these no longer investments have a very small impact, keeping interest rates unchanged during QT is somehow a restrictive stance, as the ECB is draining liquidity. And my second question is on the role of the euro. The governor of the Bank of Italy, Fabio Panetta, warned in his speech on the 30th of May, in his concluding remarks, that the recent US depreciation raised important questions about the future structure of the international monetary system and the dominant role of the US dollar as both a reserve and a trade invoicing currency. I would be very interested to know your opinion, given your vast and very important special experience in the United States. What do you think is happening now with the dollar, and also what could be the implications for us, for the role of the euro, and hopefully also euro-denominated safe assets? Thank you.
That's like 4 questions in 2. So on your first question, while I appreciate that some of you would like to hear me talk about pause, hold, or whatever, I just can repeat myself that we are currently well positioned to navigate the uncertainties of the next months. And I think the risk of inconsistency anyway is not, sorry, the risk of inconsistency of QT associated with interest rate policy, which is our main tool, is probably less critical in the event that I'm not confirming here now of a pause than it is in the event of a cut. So I don't see that, but neither do I say anything about future decisions, which would only be predicated on major shocks that we are not seeing at the moment. Now, on the role of the euro, I highly regard the speech that was given by my colleague and friend, Governor Panetta, Gentile Governatore, right? And I happen to be very much on the same page as he is. I gave a speech in Berlin about 10 days ago now at the Hertie School of the Jacques Delors Institute, in which I tried to identify the key pillars that would need to be consolidated and further developed if the euro was to play a critical role as an international reserve currency. And my conclusion is that there is an opportunity that is opening now in order to strengthen the role of the euro as an international currency, as to take it further towards possibly the international reserve currency of choice. But my conclusion is that it is not going to be granted to us. It should not be taken as a given, and it will require, in particular, that member states, the Commission, the European Council make very substantive decisions that will have to do with consolidating the economic and geopolitical role of Europe, that will simplify, streamline, and develop the role of the capital market union in particular, the saving and investment union, if you will, but particularly the capital market union. And we'll have to continue to sustain the effort of making Europe a place where the rule of law is respected, where a contract is a contract, so that there is certainty on the part of the investors, of the economic actors, that Europe is actually a reliable place of business. So I think it's not a question that can be responded in yes or no. It's a fairly thorough and deep debate that we have touched on during the Governing Council meeting.
Bella's
in the
just
last
gone.
2
The
days,
stocks market is moving slightly down, but we're still up.
Have done our part. We'll continue to do our part, but we also strongly advocate in the monetary policy statement the role that authorities have to play if we want to develop in that direction, which is a window of opportunity. Now,
Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madam President. I've noticed you're wearing the in-charge necklace. If I see correctly, I suppose it was intentional today. But going to...
Just in case of doubt, you know.
Yeah, but going to my question. So with 1.6% inflation projected by next year under your baseline scenario, won't it warrant more rate cuts for itself, regarding of it coming from the euro and the energy, and regardless of the outcome of the trade war? And second question, and I also wanted to ask about BBVA-Sabadell merger, which is now being checked by the Spanish ministers. And even though it has the ECB's green light and the one of the competition authorities,
Robin Hood,
do you fear that political opposition to
target?
mergers could hamper the advances on the banking union? Thank you.
Thank you so much. I hope you don't mind if I ask my colleague, Vice President and friend, Luis de Guindos, to address the latter part, and I would turn the floor over to you, and I'll come back to yours afterwards.
Well, thank you very much, President. Good afternoon to everyone. As you have said, we produced our report and we released our report. I think that it was almost 1 year ago. And now the antitrust authorities in Spain, they have given, they have given their opinion and the remedies that they have imposed for the deal. And now, according to the Spanish law, the government has the possibility to analyze the conditions imposed and, according to the general interest, to modify these conditions. As you can imagine, we can wait. We should wait until we have, a definitive opinion from the Spanish government. Otherwise, what we could be making is a sort of a speculation that I think that it doesn't make much sense in this moment of time.
Thank you, Vice President. And on your first question, I just want to remind you that our forecast is 2% inflation in 25, 1.6 in 26, 2% in 27. And our core inflation is even more stable than that. It's 2.4 in 25, 1.9 26, 1.9 27. Now, of course, you think, 1.6 in 26. That's exactly part of the assessment that has been produced by staff. And if you look at what other institutions have forecasted, it's at the very low end of the range for 2027. And that's also because they take into account most recent data available, not including Q1, because I think Q1 will give us some surprises. But if you compare headline inflation and core inflation, you can see exactly where the difference lies. And that is energy prices and the value of the euro. We also have inflation, both headline and core, returning to 2%, 1.9% for core in 2027. And the cuts of today, the 25 basis points cut, is deliberately taking care of that inflation path. So we are confident of the analysis of our staff on that basis. And as I said, we will do what is necessary in order to make sure that inflation stays at our 2% targets. Monetary policy will be appropriately determined on that basis. But as I said, we are very well positioned.
And the last question goes to Chelsea Delaunay of the Wall Street Journal. Chelsea, please. Yeah.
Thank you. I'm also going to ask about inflation. I mean, the narrative of the past several post-pandemic years is higher for longer, structurally higher inflation for all of these different reasons. And looking both at the core and the headline forecast and your expectation potentially for a structurally stronger euro, is that still the expectation, higher for longer for inflation and for rates? And then my second question is also about the euro. Whenever the euro goes up, people worry about how that's going to impact exporters and some of these export-dependent economies. And I'm curious if you think the Eurozone is strong enough now for a strong euro.
Is the Eurozone strong enough for a strong euro? That's your bottom line question of your second question, right? Well, when I look around and reflect on the work that we have done in the last 6 years, we have a very solid labour market. Labour market where participation has, including most recently, increased, where we have been at rock bottom unemployment rate ever since the euro was created. The fears of recession that abonded only about a year ago have not materialized. We are forecasting 0.9, 1.1, 1.3, with very limited revision to growth. The output gap closes at the end of our projection horizon. Wages have increased over the course of those years, particularly with a view to catching up with the lost purchasing power that citizens had suffered as a result of inflation. But it is now decelerating just in line and in time, I would say, to deliver on our 2% medium-term target. The monetary policy is transmitting quite smoothly to the economy. Credit is up, could be further and higher up, but credit is up. Rates are transmitting, including to corporates and mortgages. So I would say that the economy is responding quite well to our monetary policy and is delivering on that front. I would add, as I did in response to one of your colleagues earlier, that more needs to be done. And what we have seen, the Vice President and I, when participating in the finance ministers' meetings in Brussels, whether it's ECOFIN or Eurogroup, or on the occasion of Pascal Donoghue, the President of the Eurogroup, when he had dinner with us a couple of nights ago, we perceive a serious momentum to improve, to change, to simplify, to streamline, and to encourage and lock in, well, not lock in, but welcome capital into Europe. And we are seeing it. You know, the reverse Yankee bonds, significant increase that we have seen in the last few weeks is a clear indication that there is trust in our system. The capital flow that we are seeing as well, whether it is, you know, European investment returning to Europe or a bit of non-European investment coming to Europe, all that is an indication that at least market forces, investors, those who move real money around, actually see value and have confidence in Europe. So that would be my answer to your second question. I'm not sure what you meant by higher for longer, because I think I have gone out of my way to say that we are in a good place and we are well positioned now, and that we will be assessing meeting by meeting on the basis of data what, if any, needs to be done in terms of appropriate monetary policy to return us to the 2% medium-term target. So I think that really sort of brings together the discussions that we've had over
I've
the
got
last
the
2
headlines
days.
that's
And,
moving the
with that,
markets.
I wish
I'll bring
you
that to you in a second.
a happy day, happy summer for those of you who live early, and see you soon.
The next press conference is on the 24th of July.
There we go. There is the call. And just as it ends, we can see what the markets did. Let me just end this off. Okay. Got some headlines for you explaining why the markets are moving where they are. So before I do, because we're going to end this in a few seconds, please tap the like button if you haven't done so. It shares it out to more people. We really appreciate you doing that, and you're more likely to see our content if you tap the like button. If you don't like our content, tap the down like and you won't see us anymore. That's what it does. Click subscribe or ring the bell if you would like to be notified of future broadcasts. These are the news items that are moving this morning. Let me show you what's happened in the last few seconds. Let me just zoom that out a little bit more. This is the news. Nasdaq, S&P, Dow look for direction as China, President Xi Jinping and Trump hold call. They're holding a call right now, so we are bouncing around waiting for news and direction. There's not much in that story, so I'm not going to read that. We're just waiting for the outcome of that. That's bouncing the markets around. We also have this, NVIDIA in focus as Bank of America maintains a buy after meeting. Chinese companies hesitate. So we've got a buy rating from NVIDIA, Bank of America. That's very, very good indeed. Bank of America, as you know, I have contact there. And I also gave you the precise number on earnings. Work that out for yourself. 140 is what I gave you, and 140 was delivered. The other story as well is this here. Trump Media files S1 to list True Social Bitcoin ETF on the New York Stock Exchange, ARCA. All right, these are some of the stories that are moving the markets this morning. I'm not going to go into them in any more detail. There isn't really much point. So what we're going to do now is I'm going to get back to my rehearsals for tomorrow night. Tomorrow night is a huge event here on the channel. I will give you the link to the event. This is the event. You don't want to miss it. Let it be, with or without you, Zebek $21. It's a big event. I've got the biggest whales and the biggest influencers in the world on ZEBEC and XRP watching, joining in tomorrow night. With or without you, you don't want to miss it. That's happening tomorrow night. I strongly suggest you click on the link I've just given you in the chat. Go there right now. Click on the notification. Oops, a daisy. That wasn't supposed to do that. There you go. Click on the notification. The little bell just there. Make sure you subscribe because this is a different channel. It's the event channel, the music channel where we do these events. Make sure you subscribe to that channel and turn on the bell. Go over and click the like button. You can see it's going to be massive. There's 156 already liked an event, which we posted a week ago. It's already getting people to like it. Go in the chat. You might want to share this. Also, get ready for that. Oh, hello.
Jerry and Elba donated $15 through a super chat. For life is but a dream and send in the clown.
Wonderful. Thank you, Jerry and Elba. It'll be a slightly different Friday show. Don't expect the normal service tomorrow night. It's going to be a little bit different. Anyway, let's see if we've got that to move. It was 156. Let's refresh the screen, see if anybody's just gone in and liked it. Let's have a look. Let's hope so. 157. Yep, it's still moving up. It's going to be a massive event. Now, make sure that you click the share button here. The share button and share it all over the place so it becomes a viral video, which is what we're expecting, a live event. All right, that's happening tomorrow night. Now then, the other event I want to point you to, this is because I'm going to be going back to rehearsals now for tomorrow night's music. I'm writing 2 new songs, recording 2 new songs for XRP and ZEBEC. This is an event that's replacing the Closing Bell show today. Vaz is doing it. Archer Olympics special. This is going to be great. We told you about this. This is a new sector. Here is the event. There it is in the chat. You might want to go and leave a like on that, share that, get ready for that one. It's going to be a great night. There you go. I'm clicking the bell myself, notify myself. I don't want to miss when Vaz goes live, of course. There you go. That's happening tonight. So we're all set for that. Okay, we are good. Thank you very much indeed, everyone, for joining me this morning. I've got to get back to rehearsals now. As this live stream comes to an end, it's going to automatically take you to the event for tomorrow night. So you know, make sure that you're in there. So I'm going to put it here next. I'm going to put the main event. Whoops a daisy. This is our big event of the week. Expecting a viral event. I'll just add the link to there. Okay, here we go. Main event, drop that in there. And I'll customize. Yep, that's all saved. So as we end, the market's now selling off. As this meeting came to an end, it popped on the meeting and now it's sold off at the end of the meeting. People trading once again, waiting for this rip rally I keep talking about. We popped up this morning. I thought it was going to start, but it was a reaction to the meeting with Trump and Xi Jinping and the beginning of the news conference. It popped up, but it sold straight off again. I'm not worried about it. I'm holding. I bought back the S&P as well. It tells you. Elba. Hello, Elba. Will we have no? We will have music. It just won't be the normal show that you normally get on a Friday. It's going to be completely different. There's going to be music, of course, but it's a special promotional event. Anyway, right. I think I've given you everything I need for now. So I'm now going to end the stream. It'll take you automatically to tomorrow night's event. Don't forget to join Vaz for the closing bell. I will see you back tomorrow night for the big event. I've got to get back to rehearsals now. I've got a lot of work to do. So there you go. All right. Let's have a look. I'm so glad to see you back in the chat. Yeah, Elba. I'm really glad. I actually thought we had... Oh, hang on, what's this? You can now see position level data on margin maintenance requirements. Oh, that's interesting. Let me just look at this a second. A new feature on trade, draw. That's nothing new at all. Why are they telling me that? Nothing. Why on earth they tell me that? You can now see position level data, new features. Nothing's changed. Why would they tell me that? That's what we've always seen. No idea why they're telling me that. I've just got this news coming through from Robinhood telling me about a new feature and it's nothing at all. So anyway, whatever. Okay, good. We're all done. Guys, I'm out of here. I'm off. I'll end the stream. It'll take you to the big event, which you can see just down there. The Zebek to $1 big event tomorrow night. Please go there now and leave a like, share it. I'm going to get back to rehearsals. It's a good day today. We got good, solid news from the ECB. That's why I came live. I thought it was worth bringing it to you. But stay right where you are. It'll take you directly there to the big event tomorrow. Make sure you join Vaz tonight for his Archer Los Angeles Olympic special. Let me just see a few comments. Okay, you're the best, Jerry Nelber. Thank you. God bless all of you. Yes, it's lovely to have you here. Sandra, good morning, Martin and the Lucas Aid. Sandra, how are you? What time Trump speech? I have no idea what you mean. He talks all the time. Which one do you want? I don't know which one you mean. Don't drink and drive if you can smoke and fly. Oh, yeah, like that. That's funny. We can be watching. We can be watching, said Gothank Callista. Thank you very much. Okay, I'm out of here. Let me just give you the links you might need. If you want to become a member, there's going to be members specials between now and tomorrow night. You're going to get early access to the videos. You're going to get early access to the ringtones, everything to do with everything to do with XRP and Zebic. So if you want to become a member, there's the links. If you are on an iOS device, iPad or iPhone, you might want to select a browser desktop version to get that. If you want the Discord training, we've just put our second training video out now. There'll be one every week. And you get one-on-one training as well. There is Discord Premium. It's $2.99 to be a member, and we give you the training course for free, plus many other perks. There are lots of channels that the free members don't get, so there's loads of other things there for you. Also, if you want free stocks in Robinhood USA, there it is. Free stocks in Robinhood UK, there it is. And I think that's it. I gave you the Discord. Oh, of course, the newsletter. You can get that for free now, a 7-day free trial. You should have that right now because there's lots of information about Zebec and XRP for tomorrow's big event. So there's the link. There you go. I'm out of here. Thank you very much indeed. I'm getting back to rehearsals. I hope you'll join me or join Vaz this afternoon for the closing bell. And I hope you'll join me tomorrow night for the big viral event. It's already viral on X. You've seen our X account explode. And also you've seen, if you're on TikTok, there's viral. There's people picking up my videos and sharing them on their own channels. It's gone pretty crazy. Anyway, that's it from me. Thank you ever so much indeed. I'll see you back later. Have a wonderful day. Until next time, as always, take care of yourselves and each other.